The topic what we are going to discuss is preparedness or the readiness for the new return filing system. So before we jump into what is the return filing system, how we should get prepared ourselves, we'll just spend 5 minutes on what are the requirements under the new returns. Then we'll see who are all the stakeholders for the new returns. And then as an organization or as a practicing cost accountant or as an employee of the organization, what are the steps we should take to ensure that the transition to the new returns is very simple and easy. So if you see here, the new returns formats which were initially supposed to be rolled out from 1st October 2019 has been deferred on request of the trade and industry to 1st of April 2020. Now, deferring of new returns to 2020 April is a blessing in disguise, if you ask me personally. The reason is that is the date on which companies having turnover about 100 crores are supposed to implement e-invoicing. So if we have to take these two projects together so that the integration of the ERPs or the accounting solutions will be seamless and very simple. And another important change what is happening in the new returns format is, till now we were reporting only the transaction details like tax invoice number, date, what is the transaction value, and then the tax rate on that. But with the new returns, except in case of your B2C transactions, the HSN code has to be mandatorily mentioned in the new returns whenever we file it, that is in Annex 1. And for taking of input tax credit, matching is mandatory. So we are already started doing the matching from the notifications which has been released in the month of October, where the taxpayers can take 20% of the restricted credit, which got modified to 10% in the recent GST Council meeting, that is yet to be notified to 10%. So matching also has to be done under the new returns. Now, initially when GST was rolled out in 2017, we had an option where in GSTR 2, the taxpayer has to accept, reject, keep it pending. Now the same is coming back in Annexure 2. The moment if I'm a supplier, if I file my GST or Annexure 1, that data gets auto-populated on a real near-time basis to Annexure 2 of my supplier. So the supplier has only 3 options. He has to accept it, reject it, or keep it pending. The moment the supplier accepts, uploads his return, data gets transmitted to the recipient. Once the recipient accepts it, the supplier's data, that is his Annexure 1, this particular invoice gets logged. As a result, he cannot do any modification. In case if the tax invoice has to be modified, the recipient has to unlock the invoice, or it has to be routed through a debit note or a credit note. And to reduce the pressure on the GSTN portal, we as Indians have a habit of doing the compliance only at the 11th hour. That is the reason we see that the portal does not permit us to upload the returns. To reduce that shortages of time or whatever is that, they've staggered the filing of the due dates for various taxpayers. Now these are all the 3 returns which every taxpayer has to file based on his turnover. So in the current system, we have 1.5 crores wherein the taxpayer can file a quarterly return. But in the new return form, in the new returns where it is proposed, it is extended up to 5 crores. That means majority of the taxpayers gets benefited with this. As per the data available with the GSTN, almost 72% of the taxpayers are benefited because they're having a turnover less than 5 crores. So the 3 returns are Sahaj, Shugam, and normal return. It is based on the nature of transactions. If I have only B2C transactions, then as a small taxpayer, I can file Sahaj return. If I have both B2C and B2B transactions, then Sugam has to be filed. If I have both B2B, B2C, exports or imports or anything, then I have to file go for a regular return irrespective of my turnover. So here we have classified it basically which elements or which data fields will be applicable for which return. So I can skip this. Another important thing here is at what event we can take the input tax credit. So here matching is required. So if the supplier files his return before the due date of Annexure 1 closure, then the recipient can take the input tax credit in the same month. By chance, if the supplier does not file the return before the cutoff date, then the input tax credit is available only in the subsequent period. So this is going to be a big problem for all the companies where they deal with lot of MSMEs or small taxpayers where they don't have proper compliance mechanism in place or they're not aware of the things. So we need to ensure that our suppliers keep filing the returns at regular intervals. Now, who are all the stakeholders for these new returns? The stakeholders, if it is a big organizations, it is the IT team basically. GST, even though we call it as a indirect taxation, it is not a tax reform, but it is a business process reform. So the moment we say business process reform, what impacts majority is the IT applications which the organization is using. So with the invent of the new returns and e-invoicing, then the IT systems have to be totally reconfigured to accommodate the latest changes. Then, if we need to accommodate these changes, what is required? Budgets are required and management has to be appraised. What are the changes coming up? What will be the consequences if it is not GST compliant? And what is the software the companies has to take if the OEMs are not providing them the solutions for handling these requirements? Other important team which is going to be highly impacted is the finance, accounts, or the taxation teams. So the taxation team has to understand in totality what are all the new returns requirements, how it will be processed, how the data will flow from the stores to the purchase department, from the purchase department to the finance department, and when it will get approved. All these things have to be worked out, the procedure should be there. If we see in the industry, the normal practice for a GRN or a MRN to reach the finance or the accounts team is on average 60 to 80 days. So with this matching concept, that time limit has to be minimized so that input tax credit can be utilized rather than spending money from the coffers, that is payment in cash directly. Then the procurement team. Here the procurement team is the backbone. They have to educate their vendors very properly. Most of the vendors are from the unorganized sector and they are migrating to the organized sector because of the compliance and the business opportunities they get once they take registration under GST. So keeping this in mind, when a person migrates from an unorganized sector to the organized sector, he may be facing some teething troubles. So the procurement department in coordination with the finance and the taxation team have to handhold the small taxpayers so that they can file the returns on time and input tax credit can be availed by the organization. And when it comes to the preparation, so here we have the 8 points for the preparation. The first one is we need to understand in totality what is these new requirements basically. Today if we see HSN codes, some people will put 2 digits, some are putting 4 digits, some are putting 8 digits, some are putting 6 digits. So now that standardization has to come up. The notifications which says that HSN code is not required to be printed, it is only for the tax invoice that was released in 2017. So when it comes to the return filing, that notification does not have any barring. Even though your turnover is below 1.5 crores or in the new formats it is below 5 crores, HSN codes has to be reported. In the current GSTR 1, we are reporting the HSN summary, but in the new returns, we have to put it in Annexure 1 for each and every transaction. If my transaction has a 10 lines, my sales invoice, and if it has 10 different line items with 3 different HSN codes and 2 different tax rates. So the grouping has to be done by HSN code and tax rate, then only Annexure 1 data has to be populated. Yes, we can put the data of all 10 different lines. If the user is putting it manually, there is a scope of error. So here automation helps a lot basically. The moment we file or issue the tax invoice, that should get automatically populated into the Annexure 1 data. The moment this happens, the recipient has a comfort factor that material has been shipped, and he has also uploaded the data on the Annexure 1, where he can follow up with the procurement team or with the logistics team, whether the material has been arrived, whether the QC testing has been done, where are the documents, has the finance accounted for it or not. So the finance team has to understand all these provisions and then start working on it accordingly. Another important thing which has been announced in the recent notifications is QR code. This QR code has to be declared or printed on the tax invoices for transactions, for B2C transactions, wherever the company's turnover is more than 500 crores. So now we need to figure it out, who will be generating this QR code and how do we put it on the tax invoice. Is the OEM going to give us the software, or we need to integrate it with a third-party applications? Then the next important topic is the training. Training is very essential. The procurement team, the IT team, the finance team, the accounts team, everybody has to understand the intricacies of this law. So the trainings can be conducted by in-house, or they can engage external consultants like our cost accountants, where we can go and explain the intricacies to our firms basically, where we are engaged as a consultant, and then tell them what are the do's and don'ts. The only value addition we can give as a professional is teaching them about or explaining them the do's and don'ts, rather than doing a post-mortem whenever our client receives a notice. This will give us a lot of value addition. And again, if it is an organization with multi-location, normally we come across multi-location organizations. That means they have presence in various states. So the process followed in each state is different. Recently, we are having a discussion with one of the power generation companies in Rajasthan. They had 6 power generation units in Rajasthan, and all the 6 units were following 6 different procedures and processes, only for the GST compliance. So with having an Annexure 1 where data has to be auto-uploaded, and then my recipient will be accepting it, so they have to be very careful and they have to standardize their business process. So for that, thorough understanding of the requirements and the business process, if required, has to be revisited, and then only it has to be rolled out. Accounting. Till now, we have seen only 2 types of accounting. One is the single entry and other one is the double entry accounting. Now, with blockchain coming up in place, days are not very short where you'll be hearing about a new concept called 3 types of accounting basically, triple accounting. So in this triple accounting, whatever we are having in e-invoicing, if systems are tightly coupled and integrated, this Annexure 1 data which goes into the Annexure 2, that can automatically generate accounting entries for your supplier also. So if that happens, then lot of accounting entry errors, data entry errors will be minimized and information will be up to date. So we need to watch out for all these changes, disruptive changes in the technology and what is leading to these things. Another important thing is matching is mandatory. So if we go by the accounting concepts and standards, I can take the credit only once it is matched. That means whenever I have a transaction, when I do a purchase entry or when I do a material receipt entry, I cannot go and straight away take my input tax credit. It has to be parked in a suspense account or an interim account. So the accounting entries, what we generate at the time of this purchasing entry has to be reconfigured. For that, again, we need to visit our chart of accounts or ledgers and then create new ones wherever required, and whatever the software we are using, we need to redirect it, those accounting entries, what needs to be generated. And once matching is done, then the same thing has to be transferred from the interim account to the final account. So again, this is also a tremendous pain point. If automation is implemented or deployed, that will save us a lot of time. So I can share this PPT with the chapter, and the organizers, they can mail it across to all the participants. Here we are talking about automation. So what are all the areas where we can do automation, or which of the areas what I have automation now are going to be modified or disrupted with the new changes. Today, many of the organizations who have huge turnover of dispatches, they have already implemented generation of e-way bill automatically. The moment they make a transaction in SAP or Oracle or any of the ERPs or accounting software like Tally, once the sales invoice is generated, e-way bill is also automatically generated. Now, with new returns and e-invoicing requirements, the same thing has to be modified so that my annexure 1 is updated, or if e-invoice is required to be issued, then I need to have changes where the moment I generate my invoice, it will go to the IRN portal, it gets validated, IRN is generated, and that will be coming back into my ERP. That has to be stored in the ERP. So what are the things we need to do? What are the new fields we need to update it? How to import it? This is very important thing, because the physical document when we issue has to have this IRN number on that. So for this, the existing automation what we have done for e-way bill generation has to be blocked, because once the e-invoice is generated, it is automatically going to update part A of the e-way bill. So we need to see whether the OEM is giving this software for us, or we need to integrate it with third-party tools. So again, a proper testing has to be done. Because it is a compliance, we cannot take a chance. So at least for 1 month or 15 days, we need to do the testing, and we should be ready before the rollout. So at least by mid of 15th, we should have everything in place. And in the procurement process also, we need to make some changes, wherein today whenever we go for any procurement, we normally see for quality, price, post-delivery service. Now, with matching coming in place, we need to add one more element, compliance rating of my vendors. So before I issue my purchase order, I need to see whether the vendor has filed previous trial returns on time, or is he filing it on time or not. I may be dealing with hundreds of vendors. Here again, it's not physically or practically possible for me to go and verify the status of each and every vendor. So GSTN has released view and track returns, basis on which the ERPs can be configured with a bolt-on application. The moment the user enters the supplier number, this bolt-on application can go and check the return filing status. If the supplier has not filed it for say 2 months or 3 months, a warning or a pop-up can be given. Until unless we adopt this automation or the changes in the procurement process, we cannot be 100% compliant with the new requirements in the law, which are coming up on day-to-day basis. Another important thing is we need to have a continuous mechanism wherein the procurement team or any authorized person from the organization is going to interact with the vendors and identify.
May I have a question?
Yeah, sure. So we'll follow up with the vendors and then see that the tax returns are being filed on time or not. Yeah, thank you all.